Good evening, traders and investors. Will back here with another one, coming to with a Tuesday market recap. Hopefully all of you had a very nice weekend and a good day of trading as well. And in today's markets, guys, well, we got a lot of stuff to recap, that's for sure. The Trump meme coin from Friday night, the Trump inauguration from yesterday, which has led to almost 80 different executive orders that will be put into place as early as tomorrow. Thereafter, we also had Netflix earnings coming in, smashing it after the bell today, and also a very healthy broadening out of the market, which has seen the rotation pivot from some of the big tech names over into everything else that's been left behind in the last month of trade. So in today's video, guys, we definitely have a ton of stuff to talk about, and it should be a very fun one as well. So number one, of course, we're going to be going over a few of the new Trump policies that he's put into place since the inauguration that happened yesterday, of course. Thereafter, guys, we'll be taking a look at the Netflix earnings. They absolutely smashed it after the bell, so we'll be looking at a few of the highlights and the valuation of the company too. Thereafter, number three, we're going to be looking at our technical analysis in terms of all our major sector rundowns, taking a look at crypto as well. I will be going over the Trump meme coin that was launched Friday night, and yes, indeed, I did participate, and I was very early, and we did smash it with size. I know you guys know me as a conservative trader, the way I trade stocks and options, but when it comes to crypto, you guys may not know, but the people in my Discord definitely do know. I'm in the Solana trenches, guys, almost as much as you, maybe even more, 4 to 5 hours every single night, and 8 to 10 hours every single weekend. So I'll be going over that Trump trade and its implication on crypto and a review of crypto overall. And thereafter, we're going to be taking a look at our big tech names in terms of technical analysis there as well, as we lead into a very busy next 2 weeks of earnings for big tech and also for everything else. And lastly, wrap it up with a glimpse into my portfolio in terms of the trades made today in the stock trading portfolio for YouTube, of course, trades made today, and a recap on the positions that I'm maintaining into the rest of the week. So could it be a very fun and information-packed video, guys? Let's jump right into the action, shall we? So in terms of the SPY and the QQQ, SPY up a very healthy 0.92, and the Q's up a very healthy 0.6% as well. Take a look at how broad the market was today. That's not today, that's the last month. 1 month, a one-day performance, guys. Everything pretty much doing very well today, except for Apple. Apple receiving a couple of downgrades after some concerns surrounding the volume of iPhone 16 shipments and sales that they've delivered over the past quarter. But everything else, very nice, guys. And the key point of attention here has to be the bottom half of the market. The rotation into the bottom half has been extremely healthy over the last week of trade, to say the least. And we've been saying this on the channel for a while, guys. If you want to see a sustained rally from the SPY, it cannot only come from some of the big tech names popping up multiple percentage points. It has to come from the broadening out of the market overall, and that has been what's happening over the last 5-6 days of trade as we've gotten through more and more of the economic data catalysts that were volatility catalysts. 2 very nice jobs reports, also 2 very decent inflation reports, and a few economic output reports as well that showed the consumer was largely healthy during Q4, and the bank earnings that we covered last week went to support that claim as well. So overall, we do have a broadening out of the market, and that is exactly what I want to see. In terms of your one-day relative here, you'll see that every sector in the market was participating, led by some of the laggards: industrials, healthcare, utilities, and real estate, mind you. Only energy to the downside. And on the 1 week relative, guys, this is what I mean by a broadening out of the market. If we put on the 1 week relative, you'll see everybody truly is participating. Healthcare lagging slightly behind, and Apple lagging slightly behind as well. But overall, very decent gains on the 1 week relative basis. So before we get into more technical analysis, guys, we are going to dive into number one, the expectations and the new policies from the Trump administration. Now, before I get into these, guys, I want to make this a very crucial point. What I'm about to go through right now is not my stance on Trump as a person, on his character, on him as a sitting president at all. I am only looking through the executive orders that could potentially impact the direction of some thematic trades that we may be interested in taking, right? So I'm not going to be taking a political stance on this at all. It is an objective analysis of the executive orders that he is putting into place and how they can impact our trades and our investments over the next few weeks, next few months, and this year entirely. So let's move into it, shall we? So Trump's executive orders reversing Biden's policies and attacking the deep state. Now, obviously, that is pretty much his campaign in a nutshell, which was running on reversing Biden's policies and attacking the deep state, leaning down on big government, essentially. So let's get into it. In a speech Monday evening, Mr. Trump said he was also revoking almost 80 disruptive, radical executive actions of the previous administration. Some of Mr. Trump's orders are almost certain to be challenged in court, and others will largely be symbolic. But taken together, they represent his intention to sharply turn away from the direction of the Biden administration. All of that is known and very clear so far. Now, in terms of federal workforce, they are freezing the federal hiring. This is a very big one, guys. This goes towards the debt. And when you have a lot of policies that are enacted to counterbalance the direction of the national debt, well, that is going to have a lasting impact on your longer duration yields. So those of you that are interested in possibly loading up on the bond trade, suffice to say that it could possibly be a somewhat of a local bottom established by CPI, looking for the higher low and then looking for the possible rally, possibly indicating that yields may indeed have topped out. It could be a little bit bumpy. They could stagnate around here, but unless we get a lot more inflation concerns as a whole, the reduction of the debt is definitely a decent point in terms of bringing down interest rates, right? So moving on further, ending remote work policies and order federal workers back to the office full time. Now, this is a form of soft layoffs, of course. We've seen that from JP Morgan, from Meta, from Amazon over the last roughly 2, 3, 4 weeks. And it's basically saying that they know that a lot of people are not going to want to return to the office full time and may just seek employment elsewhere. So this is another kind of soft layoff concept that's been put in place by a lot of big tech and even banking companies in the last 2, 3, 4 weeks. I would not be surprised if this as well is looking to lean down the government. So looking to reduce spending, looking to reduce possibly the national debt as well. That has a direct impact on yields. So that is one thing in terms of the federal workforce that will be very interesting. Of course, we also have Elon Musk coming in for the DOGE, right? The Department of Government Efficiency, also possibly contributing to bringing the national debt down. Now, immigration and the border. This has to do with worker productivity and employment numbers, so pay attention. Barring asylum for new people newly arriving at the southern border. Now, a lot of potential illegal migrants, they do have a lot of blue collar jobs, right? So we're going to need to pay special attention if it has a lasting impact on, namely, the agriculture sector and also the industrial sector as well, because that is where a lot of illegal immigrants essentially find work in terms of their first job entering the economy, right? So that could have a little bit of an impact on manufacturing output and also potentially on agricultural output come in the spring and summer months as well. So we will have to pay special attention to the net impact of this as well, and also in terms of the deportation, right? So now, so forth and so on, no concrete plans as to when a mass deportation could start or the scale of it, but we're gonna have to pay special attention because it will have a potential impact on job openings and percentage of population that is currently full employed, right? Now, declaring migrant crossings along the U.S. border to be a national emergency, allowing Mr. Trump to unilaterally unlock federal funding for border wall construction without approval from Congress for stricter enforcement efforts. Once again, this goes to taper the flow of new entrants, new migrants into the country, and also going to have a lasting impact, well, a temporary impact rather, on the immediate workforce. And consider designating cartels as foreign terrorist organizations. The reason he does this is because they are going to be able to use the full military complex to possibly counter any cartel organizations in terms of smuggling drugs across the border and stuff like that. So that definitely will have an impact on the military complex for stocks potentially like your classic ones, right? Lockheed Martin, Raytheon, and stuff like that. So if there's a dwindling in wars, it's going to be very curious to see how they reposition military efforts to counteract efforts from the cartels. So that is going to be something to pay attention to in terms of what could possibly be in place, right? Are there possibly maybe some drone plays for surveillance, more surveillance across the borders or into cartel territory? So possibly some companies that are exposed to drones, right? That could be a potential thematic play for something like that in terms of monitoring the border, both migrant activity and cartel activity as well. Now, in terms of tariffs and trade, another big one, direct federal agencies to begin an investigation into trade practices, including persistent trade deficits and unfair currency practices. talking about China, and well, as examined the flows of migrants and drugs from Canada, China, Mexico to the United States. We know so far that President Trump has hinted at 25% tariffs towards Mexico and Canada, but not because of an economic unfair advantage, because of the flow of drugs and migrants across our respective borders, Canada and Mexico alike. China, specifically the 10% tariff, China has already been tariffed, guys, since 2018, 2019, 2020. The tariffs are not new. The Biden administration kept them as well. The new tariff, 10%, is to stop the flow of fentanyl from China into the United States. So as of right now, we don't have any concrete economic tariffs because of trade deficits or stuff like that. Those will be new. The ones currently put into place seemingly are for either the flow of people or the flow of drugs, not so much for, economic trade deficits yet, but we will have a look at that in the event that they are presented. Order the government to assess the feasibility of creating an external revenue service to collect tariffs and duties, just to make things more clear. So that'll be a policy put in forth, or a department put forth as well. Energy and the environment. This is going to be big, guys, for the thematic trades, right? Think EVs, think solar, think wind generation, and stuff like that, right? These are going to be the thematics, pivoting possibly from clean energy plays to the quote unquote drill baby drill oil plays, right? So this is why I'm bringing these up. Withdraw the United States from the Paris Agreement, the pact amongst almost all nations to fight climate change. President Trump has voiced his concern over the fact that the United States was paying more than everybody for the agreement in terms of bringing climate change down, and he wants fair participation across other member nations. He does not want the United States to be paying the largest amount into that program as a whole. So that is the motion to withdraw. Now, all of these policies are the pivot from possibly the clean energy favorable trade that was in forth from 2020 to 2024 under the Biden administration, to possibly the quote unquote the dirty energy trade entering the Trump administration. So just something to note at in terms of possible rotation away from solar, away from wind, and then possibly into some oil plays in the near term future as well. Now, attempting to reverse Mr. Biden's ban of offshore drilling for 625 million acres of federal waters. This is what I mean, guys, in terms of drilling for oil, right? Also, rolling back energy efficient regulations for several different things, restarting reviews of new export terminals for liquefied natural gas, something the Biden administration had paused as well. So a lot of things in the energy and the environment is kind of putting the environment to the side. I'm not commenting whether or not that's ethically good or ethically bad. I think everybody knows that we all want to protect the environment. I'm just commenting on any thematic trade opportunities specifically, right? So that is pretty much the extent of the energy, at least the ones that I thought that it would be, all of them arguably kin to that same thing, but those are kind of the three more important ones. And also TikTok as well. So TikTok was banned on Sunday, but President Trump gave a 75-day extension. They want to pursue a resolution that protects national security while saving a platform used by 170 million Americans. Mr. Trump ordered the Attorney General not to enforce the law that banned the site on Sunday, and to give 75 days to the Trump administration to determine an opportunity for the appropriate course forward. So the reason I bring this up, guys, is because there was possibly some rotation into either Meta or into Google, into Snapchat, because there was some possible takeover bids for the company, right? Well, now with the 75 days, you have to remove that as a catalyst, right? So probably a lot of those trades, the pivot trades for who can possibly acquire TikTok, well, all of those trades will be unwound until we get more clarity on the situation. And on the other news, withdrawing from the World Health Organization, that as well could have some sort of impact on healthcare companies as a whole. But all in all, guys, the WHO is kind of a symbolic organization as a whole. They don't really have a say in what the United States, or any country for that matter, can implement. They usually give just guidance and overall directives, and then it's up to countries independently to either follow those policies or not. The last major thing, of course, was the implementation of several COVID policies during the lockdowns and to, for population protection as a whole. Now, moving on further, implementing the Department of Government Efficiency, the Elon Musk-led cost-cutting initiative. Now, Elon Musk was fairly bullish initially, saying that they could cut 1/3 of the federal budget. But over the last few days, Elon Musk has admitted that that may just be a little bit more wishful thinking than actual possible reality. We might be looking more at cutting maybe anywhere between 10 and 20% of the national budget, and reducing debt consequently as well by about 10% here over the next year or so. But it's a step in the right direction. And it goes to show that for the new administration at least. They understand the debt is unsustainable. They understand it's a problem. So now we're starting to see the initial resolutions as how they plan to counteract all of these. So that is a quick little summary of Trump's new executive orders, at least the ones that I found most pertinent in terms of being able to impact the direction of trades, either for purposes of yields. Now, in terms of tariffs specifically, it's very tough to determine the impact of inflation from the tariffs, right? It seems like a very easy concept to think, well, if you tariff other countries, the companies associated with those tariffs will raise the price for consumers. Yeah, but guys, it doesn't necessarily mean that the consumers will keep buying the goods. If the goods go too high, the consumers may just substitute the goods away for something else, right? It doesn't mean they have to consume at the same rate. So keep in mind, overall tariffs do not always unilaterally lead to inflation. It's still somewhat of a gray zone depending on the scale of the tariffs, who they are implemented on, and in what degree as well. So we'll take a quick look on those when they come in due time. But as of now, that is just the quick summary overall. So that is everything for the Trump policies and etc. Now let's move into something a bit more fun, which is going to be these Netflix earnings. So Netflix, very good day for Netflix, guys. That is not the actual after hours move on Netflix. Let me just show you guys the actual after hours move on Netflix. And it was a big one, guys. $9.95 in the after hours. Netflix now up from the close. They were already up a decent amount today, about 2%. They were up 14.32% in the after hours, almost on the verge of cracking $1,000, looking extremely strong. Why, you might ask? Well, because they absolutely crushed it in every single metric possible. Look at this EPS, beat on EPS by 1.52, beat on revenue by 1.33. But that was not the main point of the argument. Where they crushed it the most is the amount of subscribers, guys. They 2x'd Wall Street's estimates for subscriber growth. Let's have a look, shall we? Netflix shares soar as company reports surging revenue, tops 300 million subscribers. It was a fantastic report back to front. So now let's get into it, shall we? Company surpassed 300 million paid members during the quarter, adding a record 19 million subscribers. Wall Street's estimates, guys, were for 8.5 million. That is over 2x the amount that the street was expecting. The company also shared that including extra member accounts, its global audience is estimated to be exceeding 700 million people. That is the largest network, arguably, I mean, if you were to take away Chinese national TV stations, this is arguably the largest network in the entire world in terms of viewership. We really have built the businesses on variety and quality across countries, across regions, across genres, and really focused year-round on having a very strong slate of programming for our members, said the Netflix co-CEO Ted Sarandos. Moving on further, revenue in the fourth quarter jumped 16% year over year. For the full year 2025, Netflix raised its revenue expectations to a range of 43.5 from 44.5. to 44.5 rather, around 500 million more than was the previous forecast. So triple beat on EPS, beat on revenue, beat on guidance forward as well. And you can maybe include a fourth beat in terms of the sheer size of beating on the subscriber count. The fourth quarter was the last for which Netflix will report quarterly paid subscriber counts. As previously announced, we've been talking about this for 2 quarters. They are done reporting subscriber growth. Now what they'll do, biannually, twice a year, they will put out an engagement report alongside the second and fourth quarter releases. They want to put a lot more emphasis on operating margin growth, revenue growth, and financial metrics rather than being tied into subscriber growth. Is that possibly a sign that Netflix's subscriber growth is slowing down a little bit and they don't want to show it anymore because the street puts too much emphasis on it? Yeah, probably. To be honest with you, absolutely. So now the focus will be on what actually matters, the company's capacity to drive revenue or drive margins to the bottom line and drive free cash flow to the pockets of shareholders. Now, moving on further, we are thrilled that some folks came in for the fight and some folks came in for the games, but they stuck around for Squid Game and for Carry On and for Black Doves and for 688, said the co-CEO Ted Sarandos. All those things performed really well in the quarter, talking about, of course, for the games, the NFL games, the 2 Christmas NFL games that happened that were very popular for Netflix, and also for the fight, talking about the Jake Paul versus Mike Tyson fight, which was the largest audience in all of boxing history, arguably. What's been most encouraging is the retention behavior of those folks who did come in for these specific events, but that stayed. They look like a lot of the folks who come in for all of our other big titles. So the company has a very sticky business model. They get you in for a thematic event here and there, and then people just stay because they like it so much. That is how you know that the business has a very sticky business model, and also how you know that the business has tremendous pricing power. When clients stay, usually, company can increase prices incrementally and people will still stay as long as the price increases are quite small. I'm pretty sure nobody would care paying $1 more on their monthly Netflix subscription, right? However, when you have 300 million members, even $1, that is $300 million per quarter. That is over $1 billion per year in extra revenue, guys, right? So that is very large, and they can keep doing these small but meaningful for them price increases. Netflix also announced it would raise prices on some streaming tiers between $1 and $2 a month. There you go, pricing power, and they barely lose any members when they do it. That's how you know it's a very solid company. We're on track to reach sufficient scale for ads members in all of our ads countries in 2025. A top priority in 2025 is to improve our offering for advertisers so that we can substantially grow our advertising. I've been saying this for the last 2 quarters. They've been putting a lot of emphasis on their advertising tier. If you guys don't know what the different tiers of Netflix looks like, right? You can just hop onto the price plans and pricing right there, and you can see essentially they have standard with ads now, kind of like cable TV. Usually this is going to be a lot cheaper than the rest of the offerings. Here you can see $8 in Canada. The standard without ads is $19. So this is a very attractive price point for most people. It just passes on your credit card and you kind of barely see it. That is why they've done it. And also the advertising that they do here is a very, very profitable source of revenue for them, guys. Extremely high margins on this tier right here, which is why they are offering it in more and more countries. That is what's been able for them to improve their margins over the last 2 quarters and improve their cash flow as well by bringing a lot more of that money to the bottom line. So moving on further, guys, in terms of the actual Netflix earnings release, I'll read to you a few of the highlights, then we'll get into the valuation. So we know revenue grew 16%. This one is the big one though, guys. Operating margin expanding 6 points to 27%. Operating income exceeded $10 billion for the first time in our history. We'll get into that a little bit below. Q4 revenue increased 16% year over year, 19 million paid new ads. We saw that. Operating income 52% year over year, guys. That is not a small number. That is huge. Absolutely massive. The advertising tier is doing wonder for them. Moving on further, in terms of for our priorities for 2025, growth of the ads business, further develop new initiatives such as live programming and games because it's done very, very well for them over the last quarter. So now they want to expand that business, more live sporting events, more boxing events, and more games as well. Now, moving on further, sustain healthy growth. They raised their guidance and they want to increase their operating margin to 29%, up 1 point from the prior forecast as well. So raising the guidance on the top line and the middle line of operating margin as well. Take a look at these numbers, guys, because they're very good. Look at this subscriber growth in just a year's worth of time, right? From 260 to 301, 40 million new people on Netflix this year. Year over year growth, what does that look like? 14.4%. Of Q3, and now Q4, 15.9% year-over-year growth for subscribers, very strong. Net new paid additions, obviously that 19 million figure again. And then obviously down below here, we have the share count, which I've highlighted. The share count is consistently decreasing. The company still has a ton of money for buybacks, so nice to see them putting all those increases in profits, especially in terms of operating income, which then becomes free cash flow. Nice to see them putting all that money to work to put it back in your pockets in the form of share buybacks. Now let's move on further. We believe we account for less than 10% of TV viewing in every country in which we operate, all of which suggests a long runway for growth as streaming continues to expand around the world. This is true, guys. Even though Netflix is huge, they still have a very small portion of the market when you measure across all viewership media, right? In terms of TV, in terms of online and everything in between, they still have a relatively small portion of the total market. So a lot of upside for them potentially. We're fortunate that we don't have, this is crazy, I can't believe they said this. We're fortunate that we don't have distractions like managing declining linear networks, talking about cable TV. That is, Wow, that is something, right? When they just the words that he used, right? It's like a diss, but a very polite diss, right? We're fortunate that we don't have distractions like managing declining linear networks. Ouch. With our focus and continued investment, we have a good and improving product and market fit around the world. That is very obvious as well. And I think I highlighted a few things as well in terms of monetization. Our ads plan allows us to offer lower price points for consumers, which continues to be quite popular. It accounted for over 55 in this quarter, accounted for over 55% of signups. That is massive, guys. 55% of all new signups went for the most profitable tier for Netflix. It says something, right? And signups in our ad country. Signups in our ad countries and membership on our ads plan grew nearly 30% quarter over quarter. Very nice. We're on track to reach sufficient scale for ads members in all of our ads countries in 2025. Cash flow and capital structure. One last thing that I'll remind you guys, they repurchased $6.2 billion of shares throughout the year. And also, guys, the board has approved an additional $15 billion in buybacks, bringing the total of buybacks to about $17.1 billion. Very healthy, guys. In terms of Netflix market cap, just to do some quick, napkin math right here, $17.1 billion. The market cap is roughly around 371. So 17 divided by 371, that's about roughly 4.5% of the outstanding float that they can keep buying back. A very healthy number, to say the least, right? So that is the highlights of the Netflix quarter. They crushed it, guys, in terms of operating margins, in terms of net profit margins as well. But you'll notice something that I highlighted down there. If you notice this graph right here, you will also notice that their net income is lower than it's been pretty much all year. Why is that the case? Well, because in Q4, they did a lot of things that they'd never done. Obviously, the streaming of the Jake Paul versus the Mike Tyson fight, the NFL games, all of that required a little bit of investment to get the servers required to handle the volume of people that Netflix servers were having. Also, the budget for very blockbuster big shows, such as the return of Squid Games and something and other stuff like that. Well, Q4 was a very big quarter in terms of expenditures for the company, which is why the net income is a little bit lower than we've seen all year. The free cash flow as well is a bit lower than we've seen all year, but it's just that. It's lower than we've seen all year, but because the company put it to use in the proper fashion, spending on their hit shows and reinvesting the capital towards new servers and expansion of the infrastructure so they can handle all of the new members and the live viewership as a whole. So that's why I highlighted down here, in the last, very last slide, which is why the cost of revenues here, you can see a nice uptick here in terms of the cost of revenues, outpacing the gains in revenue for the quarter. So the cost of goods sold outpaced, which is, increases in servers and technology and stuff like that. There's a whole technology and development sector here, but the cost of revenues, a number of different things go into there. But suffice to say, they just spent a lot more money to earn that revenue just because they're building out the business, right? Sales and marketing, a lot more as well. Marketing the fight, marketing the NFL games, marketing their video games as a whole, because that's a whole new segment on Netflix as well. All of that contributed to having a bit more excessive costs than they were used to, which did bring down the net income in relation to the last few quarters, brought down as well the net margin percentage, but I do not feel it's a problem at all. The company needed to do that. They spent the money wisely, in my opinion. So let's now get into the valuation after all of that talking. In terms of the valuation, guys, well, Netflix at $1,000 is not really as expensive as it seems to be. In terms of where it stands, guys, I'll remind you that this company is expanding EPS in a very streamlined and smooth fashion. The next 4 years should be arguably some of the best years the company has ever seen. In terms of the revenue as well, revenue steady up and to the right chart, nothing bad to see there as well. And in terms of the financials, in terms of the balance sheet, do they have too much debt? Well, as a matter of fact, no, not really. Only $17 billion worth of debt. They generate about $7 billion of free cash flow per year. This year was closer to $8 billion, and they have about $7 billion of cash on the balance sheet as well. So I do not think that that is a problem for them. And in terms of net margins, look at the net margins the last few quarters. 22, 24%. Look at the increase in net margins over the last few years. It started off during the pandemic, 9, 11%, and now they are double that in the last few quarters. Excessively good, expanding everything in the right direction. Revenue, EPS, net margins, free cash flow, everything working well for the company. So the valuation is actually not that bad to begin with. So my bad, I should have changed this. This says Q3 October earnings. Let me just change that right away. This is actually Q4 December 24 earnings in January. My bad, I'm through this with you guys live. My bad for that. Now moving on, revenue growth 10% per year, very good. EPS growth of 23% per year, very good as well. That gives them a forward PE for 2025 moving forward on a forward basis, 42.05 at a first glance seems a little bit high, right? When you divide it by their growth factor by the EPS, you get a PEG ratio of 1.83. I'll remind you, anything under 1 is cheap, between 1 and 2 is okay, but you want to be closer to 1, and over 2 starts to get a little bit expensive. This is a valuation ratio that we can use to compare apples and oranges. You can use the PEG to compare Netflix with Google or with companies in different industries, anywhere from, I don't know, like healthcare companies or anything really. Companies from different industries, you can bring them into one common denominator, which is known as the PEG ratio. It is basically how much are you paying for the growth moving forward. And as I said, anything under 1 is cheap, between 1 and 2 is okay, and over 2 is expensive. 1.83, it's a little bit on the high side, but it's not over 2. I still think this company is fairly valued, even at $1,000. I know, it's fairly valued. Is it a little bit rich? Sure. Is it cheap? Definitely not. But is it fair in relation to the growth? I think so, guys. Am I willing to pay $1,000 for new shares? Well, maybe if I was starting a long-term portfolio and I wanted to have Netflix in my portfolio for the next 5 to 10 years because I like the business model and I think that there is secular trends at play here in terms of them eventually replacing cable networks as a whole, then yes, I would not mind DCAing into Netflix every month or every paycheck to build a position for long-term. But if I'm looking to swing trade this here, the risk reward profile is arguably not the best, right, guys? You guys know how I like to trade. I like to wait for the pullbacks, the retests, and then possibly the run. So if we get a pullback here from the $1,000 range, back down into possibly the mid to low 900s, I might be looking for a little bit of a swing trade opportunity here, because then the risk reward becomes a lot more favorable than just buying the absolute top of the breakout. Then your stop loss has to go all the way down below there, and it's just way too wide of a risk reward profile in my humble opinion. So I have some long-term shares in my long-term portfolio that I am not considering selling at all. So for me, this one is not a sell, it's just a hold, but maybe in terms of buying any new shares, if you already have an existing portfolio and you bought them all the way back here somewhere, then, averaging up right here, guys, maybe not the best value in the market right now. But if we're looking to start a new position, if we're a new investor, I see no problem with putting a little bit of money into Netflix every single paycheck. The company's growing well. It has tailwinds in terms of trends, consumer trends, arguably for the next 5 years, and I really don't think this one's going to stop. They are by far and by large the biggest and best streaming company in the entire game right now. They run circles around Apple, around Amazon, around Disney, around everything in between as well, and especially around cable TV. They are the streaming leader, and I think they will stay that way, arguably forever. Very tough to challenge them right now in their leadership position. It is basically their game to lose at this point. Extremely solid company, but trading slightly high right now. So those are my thoughts on Netflix as a whole. Fantastic earnings, and congratulations out there to all Netflix shareholders. Now let's move into some technical analysis, shall we? And similar to my sentence, well, not much has changed, right? It's still one single bounce on the SPY. So context was the daily downtrend that was clear as day, and the context also was possibly embarking on the weekly downtrend as well. That lasted for a very short period of time before we get now the engulfing move. The engulfing move is a very nice one on the daily time frame. Bullish engulfing V-shaped recovery. The bulls have created a ton of space off the lows. Anything above 575 now on a decline. We'll be waiting for a daily higher low for further trend continuation. Now, the best case scenario is if we pop up a little bit higher, challenge the all-time highs. Why? Because then we will get this area back. This is currently resistance, still resistance for a little bit. If we come above it, we can then use it as support, similar to how these bulls use it as support back there. Use it as support, and then possibly go for the whole breakout, retest, and daily trend change to the bulls, going for the weekly engulfing recapture, and possibly resetting down the line a new weekly uptrend for the SPY, and putting an end to the roughly 1.5 months of consolidation that we've seen on the index as a whole. So I like the SPY, and I like it so much that any little dip down here, I will be using to buy the dips on my favorite companies in the market as a whole, going for the daily uptrend recapture. So all in all, everything is not looking too bad, especially when we look at the broadening out catalysts, right? Fear and greed index now curling higher. Now it is off the lows that we were last week, which was about 27 coming up. And a few of the fear gauges are also looking better than they were before. Now, momentum. Fear used to be extreme fear last week. Stock price strength in terms of some people like to call this advanced decline. Net new 52-week highs and lows on the New York Stock Exchange It is still at extreme fear, but you can see we're off the lows, arguably still at some of the lowest points we've been in the last year of trading. Stock price breadth, although the heat map has been improving a lot over the last week, it's only been lasting roughly 1 week. So that's why we're still somewhat weak in relation to last year's worth of trading, but we are coming up a lot quickly, a lot faster right now, a lot more quickly in terms of the broadening out. And that is pretty much it for your fear and greed. I'll remind you as well, guys, seasonality for the S&P. January and February are known to be quite bumpy months. But then when we open up into the spring, late March, after all the earnings are behind us, the early volatility of the new presidential administration as well, traditionally we do get some very nice rallies here end of March, April, May. So those are the ones that we will be targeting. Any dips in January and February on our favorite high quality, high conviction companies should be some decent buying opportunities in my humble opinion. So the SPY not looking too bad at all. And I'll remind you, when we go through our broadening out catalysts, because I do this on the SPY, take a look at the percentage of stocks above their 20-day moving average. We are now back to 69. The entire Jerome Powell fear cycle has now been erased, at least for the short-term moving averages, looking good there in terms of broadening out of the market. This is all market participation right now, percentage of stocks above their 50-day moving average. We came from arguably some of the lowest reads that we've had over the last 2 years of trade. We've now bounced back up. Almost at 50% of all stocks have recuperated their 50-day moving average. And also your percentage of stocks above their 200-day has went from a very low read of 45, arguably some of the lowest of 2024, and now we are back to a much more manageable 57. So what does this all mean? The 20 shows that the short-term momentum is now all for the bulls. The longer-term 50 and 200 means that although we have not recaptured, there's still a lot of damage that was done over the last 1 month. If we put this on the 1 month, right? You'll see still a lot of damage that was done across many sectors in the market, but it does show that these are recovering in a more broad fashion sense. So everything looking good in terms of market breadth and in terms of the expansion of the most recent bull rally that started about 6 days ago. Now moving on to the Qs, shall we? So give me a very brief moment. Let's do the Qs. So the Qs also similar to the SPY, kind of the same setup, right? We know that we're in the descending channel. I'll just erase this, guys, because you don't really need it. I know you guys want me to draw trend lines all over the place, but in all reality, you don't really need trend lines. You just need price action and horizontal levels of support and resistance. I'll show you, right? So daily engulfing move, 100% engulfing move shows that the bulls want to establish control. A lot off the higher lows right now. 500 is your most recent higher low. Tons of space created looking for the higher low for the daily trend change. Now you can argue, if I still had this daily trend line right there, you can argue that we might be looking for a retest of the trend line. However, notice you don't need it. This area is a retest of many different things, not only the trend line. The trend line helps, yes, but retest of all the short-term moving averages on the daily, combined with cross of the MACD, which has been weak since Jerome Powell, shows the momentum is coming back, and horizontal support 515 to 510, looking for the essential V-shape recovery, arguably the breakout of this range of resistance, the breakout, the retest, and the possible run. So all in all, guys, as I'll show you, you do not need trend lines for the most part. It is always just a question of price action and short-term control measured by the daily and weekly timeframes. So the Q's looking good, a lot of space created off the lows. Same thing for the weekly, guys. They had the weekly downtrend, the bears did, and now in one short week, we have now almost V-shaped the entire weekly move down. So eventually we will need to reset the new weekly uptrend, but so far the bull's looking good. Even if we do pull back, I think it's a great opportunity to be buying some of the dips on our favorite names out there. Moving on to financials. Financials just continuing on to the powerhouse. We didn't cover them today. Charles Schwab had great earnings today, 6%. They were the last remaining of the quote unquote big banks for today, and they did quite well. So nice to see their earnings pulling up the XLF sector as a whole, but largely the sector is running off of the the tailwinds from the bank earnings that happened over the course of the last week of action. Now, in terms of the context, I'll remind you, it was a daily downtrend. I mean, all the way since there, right? But now, huge engulfing move. And yes, I do agree, short-term timeframes, the 4-hour, very overbought right now. The 1 hour as well, oscillating between overbought and not. But you guys can understand, right? Trend is your friend. Pay attention to the 12 EMA since the bank earning rally started and who controls the short-term price action. As you can see, never any loss of the hourly time frame. As soon as you see a loss of the hourly uptrend, low, lower high, lower low, and a loss of the 12 EMA, suffice to say the upswing is done, and we might just be looking for a little bit of daily consolidation. That daily consolidation has a lot of space for it. Anything above 47, looking for a daily, higher low for possible further trend continuation. The largest area of contention, I would argue, is possibly down here, 49. It starts the moving averages and this previous area of resistance, which is also going to be acting as support. Would not be surprised if the bulls pull back a little bit before establishing the higher low and going for the daily trend change. Same thing on the weekly. They had the weekly downtrend, big engulfing move. Now we look for the weekly uptrend recapture. So they'll be able to do two things at once, right? Either one move and rally, or daily downtrend, slow move, and that sets up the weekly for the trend change. Both trends looking to be changed at the same time. Moving into XLV healthcare right now. Healthcare getting a decent little rally off the bottoms here today. So nice daily uptrend continues at this point. And now the weekly bounce, right? Because we know the context is this weekly downtrend. The weekly bounce is gaining a little bit more momentum. Take a look, guys. The size of the bounce now is almost at 618. That would be roughly 143. Why does that matter? Well, because the more space you create off the lows, the better it gives the chance of a bulls to reset into a new weekly uptrend after roughly the last 3-4 months of consolidation. So all is not looking too bad. Just monitor this daily uptrend very closely. At this point, anything above 139.50, just looking for a higher low for possible further trend continuation. And if they can get higher and higher and higher, when we do get that recapture or when we do get that retest, it might just be a good opportunity to enter some healthcare plays for maybe a whole sector recovery through 2025. One of my favorite names I'm looking at right now, there's a few favorite ones. UNH, solid company, guys. They had earnings, and their earnings, we covered them last week. Very, very, very solid earnings as a whole, despite concerns around rising medical costs. That is a temporary issue, in my opinion. It will be resolved, and premiums will be reset to the upside over the course of the next year's worth of trade. I do not fear for United Healthcare. They've been through many, many, many of these cycles, and their chart looks like that, so I'm not too worried about them at all. They're a tremendously strong company. And another one, Johnson & Johnson. Johnson & Johnson has earnings tomorrow morning. We'll see, but really nice establishment of a support range in roughly the last more than two. This is like 6 years, guys. In the last 2 years, yes, but the price action, the congestion zones do go back all the way to like 2018. You see it best on the monthly, right? Very, very, very congested area right there. So could be looking for a possible bottom to be established and a very slow recovery for Johnson & Johnson. It's not Palantir. It doesn't move very fast, but is there a swing trade opportunity here? Quite possibly indeed, yes. Moving on to semiconductors right now. So semiconductors also V-shaped recovery, almost the 100, well, more than 100% engulfing move. Looking good, guys, but you know, right? We are not closed yet. How many times have they done this? Many, many, many times. I will only close this box of resistance, which is weekly, big resistance, as you guys can see. I will only close it green when we close a weekly candle above this move. So far, so good, but they've undone many nice moves in the past, so we will see if it's finally the one. I'll remind you, if you ask me, we're probably moving forward for it, guys. 2025 guidance from all semiconductor companies. We heard from TSMC last week. The guidance from all these companies is absolutely fantastic. You guys know me. I cover them every single quarter. The last 2 quarters, they've been saying 2024 end going to be a little bit slow, but, you know, the first quarter in 2025, a little bit slow, but Q2, Q3, Q4, booming expansion for all these companies from TSMC, Micron, NVIDIA said the same thing as well. So can they possibly do it? Well, we're going to see, guys, but everything is not done yet. If we have a little bit of retest of the downside, I'll remind you what we're going for here. A lot of space, anything above 240, looking for a daily higher low to establish some form of support, maybe use the resistance box, at least the initial form of it, as some support before getting a new daily leg higher and going for the weekly trend expansion, which we've desperately been looking for, arguably for the last 3-4 months of trading. We'll see if this week is the one, but the MACD is arguably the smoking gun on this entire chart. Moving on to the IWM Russell now, and we're almost done. So the Russell up about 1.92. Very good performance by the Russell, but you notice one key thing. Russell and the value names, because you can look at the value index too, IVE. You can look at the dividend names as measured by SCHD, Schwab dividend. They all look the same. What is moving these charts? It is your yields. And we'll take a look at yields in a minute, but I just want to show you guys 6 days of down in the yields. And then consequently, you get 6 days of rally on the Russell, right? So these two things are hand in hand. That being said, nice engulfing move, looking for the higher low. Anything above 213, 214, looking for a daily, as soon as this move is done, by the way, daily higher low for further trend continuation. How do you know the move is done, guys? Look at the hourly time frame like we saw with the banks, right? Loss of the hourly time frame. This is not a loss of the hourly time frame. As a matter of fact, we were on extended trading. Put it on regular trading, no cut of the lows, no loss of the hourly time frame. This as well, no loss of the hourly time frame, and still no loss of the hourly time frame. When you see low, lower high, lower low, and a loss of the 12 EMA, which is your short-term momentum guide, then you will know the daily move is done. You're looking for a little bit of daily consolidation, and depending how high they get, it betters their chance. The best case scenario is breaking above 232, looking for the break, retest of all this resistance, which is now going to be support, retest and possibly run. That would be the best case scenario for the bulls, but looking not too bad. Weekly engulfing move as well. So we'll see how high they can get and then maybe reset something like that for my beautiful Picasso drawings, right? Moving on to the Dow Jones. Dow Jones recovering nicely, but this one as well looks exactly like the Russell, looks exactly like value. That being said, nice daily engulfing move, same thing. And when we get the daily engulfing, anything above 41,850 looking for a higher low for possible new trend establishment by the bulls, looking quite strong in that respect. Back above the moving averages, which we have been below, arguably since the early portion of December. They have so much space, guys. And now that we're above these guys right there, right, 43.2, that's going to be the first line of defense for these bulls, looking to maybe reset the daily uptrend. Weekly also is an engulfing move. The bears had the weekly downtrend, lasted for all of 1 week, and then we get the 100% engulfing move on the weekly, looking good, so much space. So even if we do consolidate into a new daily downtrend, well, the bulls have a ton of space, guys. Anything pretty much above 41.8, looking for that weekly higher low for a new weekly uptrend after having lost it in the last month and a half of trade. So that is your major sector recap. Hopefully you guys enjoyed that. We'll take a look at yields very briefly, but yields are just the inverse of the Dow Jones or the Russell or the value names, right? Big engulfing move to the downside, almost a 100% recapture, possibly anticipating a little bit of a give back, right? Like a dead cat bounce. And then we are going to be watching for the rollover. If it rolls over, then my Picasso drawing of a head and shoulders will also come alive. That is the likely scenario, in my opinion, unless we get, I don't know how we would get these, but let's say we get really bad inflation headlines or something like that. That's the one thing that could possibly, raise these long-term yields. But I do think that the peak of the speculation was before the CPI, and since the CPI, and now that we're through the initial volatility of the Trump inauguration, I think the yields are cooling down a little bit. And I really do think that maybe all the traders that have been shorting the bonds over the last 3 months since Powell started decreasing rates here, I do think that a lot of them are going to start winding down that trade quite aggressively, as a matter of fact. And I would not be surprised if this can be arguably the top of yields. I don't want to call it right away. A lot of price action left in order to determine that, but it is a catalyst top with CPI. So it stands to argue we can only really get above this if we have more worry surrounding yields, surrounding inflation than we had prior to CPI. And how do you get that? Either very large tariff concern over one of Trump's policies that he puts forth in the next 2-3 weeks. We'll have a look. Or bad actual data from inflation, and that really won't come until the midpoint of February, where we get the next CPI and PPI releases, right? So it could just be some form of a symbolic, most risky trade before CPI, and then all that risk, all that volatility has kind of come undone. So a little bit of a recapture of the yields to the downside, and bonds, conversely, can be a nice rally trade. I will be looking to enter this one myself. I'm just waiting for a possible daily higher low, and any little drop back on the bonds, I'll be looking at position, probably going to use TMF for this one, and I'm going to go for some really long leap calls, guys, thinking, December 2025 or even June 2026 wouldn't be opposed to that, because the yields move slow, guys. I know they moved up a lot, but even when they come back, it's just going to be like a slow grind higher. So you can't really get ahead of yourself. Now, that is pretty much everything for your market recap and for yields. Now let's get into the juicy stuff. And we're going to talk about Bitcoin hitting the new all-time highs. But I'm pretty sure all you guys want me to talk about the Trump coin, right? This Trump coin, as a matter of fact, going from zero to almost $73 billion in fully diluted market cap in the first 48 hours, guys. That is a record for all of crypto. That is the biggest. You can call it an actual political coin. You can call it a meme coin. I don't care what you call it. This is the single-handedly, and leave it to Trump to do that, right? Single-handed best performance of any coin ever in the history of crypto in terms of market cap gains, unless you count Bitcoin, of course, or the initial maybe Ethereum rally. But this is by large and by far the biggest of all time. Fully diluted is 41 billion right now. This just means that there's only, the true market cap is 8 billion right now. This just means that there's 80% of tokens that are locked up right now. If you're familiar with crypto, you know what I'm talking about. If you're not too familiar, it's kind of like stocks, like Palantir had a large portion of their stock locked up. And as time moves on, management can start selling those shares, right? Same thing for this. So for the first 3 months, there's a lockup period for 80% of the supply, which is also why it can run so hard, because the coin is only running on 20% of available supply. So that is why when you have tremendous amounts of volume, tremendous amounts of interest, and a arguably low market cap because it's trading on reduced supply, you can get these crazy moves like this. You won't see it on coin market cap, but if you go on coin market cap, in terms of the market caps here, if you use the fully diluted, Trump coin at the peak would arguably be number 7. It eclipsed Dogecoin. These are fully diluted, so you won't see Trump there. You'll see it down here where it should be on this page because it's logical. They measure by actual market cap, not fully diluted, but Trump is sitting here at 8.3. If you were to use the FDV, well, they'd be sitting above Dogecoin. That is absolutely insane, guys. 48 hours, absolutely insane. And yes, we did indeed hit it very early in the Discord. I was pretty much in at 2.7 billion, 50 sold, 10K. So I'm not going to disclose the full P&L, guys, because, I mean, I did it all throughout the channel. If you guys are members in the Discord, you guys know I was showing you guys a screenshot of the clips out that I was making, and they were quite sizable to say the least, right? We smashed this one, absolutely smashed it, guys. I sold my first batch a Saturday morning at about 32, the resurgence of the peak right here. Then the next sale pretty much was 47 because Trump is 47th president. Then I went with a 59, a 65, and a little bit more closer to 70, about 68, 69. Suffice to say, guys, I'm currently holding roughly about 15% of my bag total. I will hold it just to see what happens, but I was pretty much taking profits on the way up. So very juicy trade, extremely happy with the way this one played out. And we hit it early, we hit it with size, we went for it, guys, right? Crypto is, especially for me, right? There's 2 ways to play crypto, in my opinion, especially if you're playing in the trenches, as we call it, right? On the new pairs, not so much trading the altcoins, not so much trading Bitcoin or Ethereum. Those are fun, but when you want to look for new pairs, right? There's 2 different types of trades. Number one is us in crypto, we like to use a gaming metaphor. If you've ever played any video games or whatnot, talking about, like, let's say you've played an MMORPG like WoW or like Diablo or like anything you want, right? There's 2 types of trades. There's PvP, player versus player, and then there's PvE, which is player versus environment. Now, player versus player is similar to, if I have to give it a metaphor, it's like the quantum computing stocks right now, right? So if you look at something like QBTS, this is PvP. This is a bunch of people on Reddit and you guys watching YouTube videos that are playing against each other. You guys are buying and selling calls to each other. You get very big moves. Some institutions are participating, guys, but not many institutions are rushing to buy quantum computing stocks because they know they're overvalued. These stocks have no revenue at all. So here, it's always a gamble, right? Now, GameStop is a good example of PvE, meaning everybody came together and stuck it to the institutions. Everybody, it was everywhere, guys. It was on the news. Everybody was talking about GameStop when it truly ran. So it started off as player versus player. People weren't too sure, buying and selling calls to each other, happy about 100% gains. And then it turned into 1,000Xs on some call options, right? That is when it goes from player versus player to PvE, when it becomes the center of attention across everything. That is when you know that if you're in something early, you have to let the volume come, guys. You have to let it come. You have to let it hit peak FOMO, peak euphoria. Let it hit the news outlets. Let your friends that you haven't heard about in 5 years message you on Facebook or Instagram or TikTok and say, hey, have you seen the Trump coin? Yes, I've seen it. I've been in since 3 billion. Oh, you saw it at 65? Possibly close to a top signal. So suffice to say, when you're early, you want to use the rest of retail as exit liquidity. The same thing you should be doing in the GameStop trade when it starts rallying. Use other people as exit liquidity. Let's call it how it is, guys. It's, this market is a zero-sum game. Some people win, some people lose. If you're in quantum computing stocks and you're in super early, you use the rest of everybody as exit liquidity. It's the same thing. If you're in a SoundHound early, when it blows past its valuation, you're in very, very cheap. You use all these people as exit liquidity. The same thing for Palantir. If you're in Palantir for very, very, very cheap and you have a ton of shares, you use all of these new people that are watching YouTube videos for the first time, buying Palantir the first time. They barely know what the company does. They just know it's an AI stock. They buy it here, they buy it here, they buy it here, they buy it here. And you, with all your shares there, you are just dumping into them, gladly taking your 5, 6X. Trump is the PVE trade, or was the PVE trade. Very solid trade, guys. So when you see something that captures the attention of everybody, it's a historical event, right? A sitting president has never launched a crypto coin, nevertheless, right? And it's Donald Trump, arguably the man himself. Say what you want about him, but he is a walking meme. He says some very polarizing things about everything. He is a walking meme. So when you combine a walking meme, launching a meme coin, and being the president, it's like the craziest thing crypto has ever seen. It becomes a no-brainer play, especially when you see it too early. And when you get in so early sometimes, especially when you're in the trenches like me, so often, it starts rallying to market caps you rarely ever see. And you think that it's so high already. You think you're so early that the move is done. You're so early, you're up so much money that you think it can't possibly run more, but then you kind of forget, well, it hasn't hit the media yet. It hasn't hit TikTok. Nobody's talking about it. Nobody's FOMOing. You got to let it cook. You have to let it cook, guys. Give it the 48, 72-hour cycle. And if it wasn't for him releasing the Melania coin, which really diluted the Trump effect as a whole, arguably this one would probably have moved even higher. So right now it's consolidating. They did not like the fact that he launched Melania. That's just how crypto Twitter is, guys. They don't like it when you ruin their narratives by diluting them with another coin. It makes them think, well, what if he launches a Baron coin? What if he launches a Don Jr. coin? What if he launches XYZ coins? You know what I mean? They want one coin. Everybody wants to rally around this one coin. When you start giving secondary coins and whatnot, it kind of ruins the momentum. It kills the vibe a little bit. So that is why the dump happened on the Trump coin as a whole, but I'm still holding 15% of my bag, and that's all I will say on the matter right now. Do not ask me if it's a good choice to buy right here, guys. I'm pretty sure you know 42 billion market cap, guys, is higher than almost everything in this list. I know crypto can get crazy, but you have to also look at this logically, right? It is already very crazy. So buying here, in my opinion, you should only be doing with capital that you are 100% willing to lose, either 50% of it on a stop loss or the entire portion if it goes to zero. If I would be seeing this for the first time, not knowing anything about it, guys, you know, I will tell you guys right now, right? You are not early. You are definitely not early. You are late. The coin is everywhere. It's on Binance. It's on Coinbase. It's on Robinhood. It's everywhere. Everybody's seen it. Everybody's heard about it by now. Who is your exit liquidity? Arguably no one. Can this one move higher? Yes, but we're going to need some news like a strategic Bitcoin reserve. You're going to need the Trump administration being very favorable for crypto, but also you're going to actually need the actual rally that people have been anticipating on Bitcoin, the 125, the 150K rally, 200K rally, whatever the terminal area is. You need the broad-based rally on crypto carrying into the altcoins, carrying to the meme coins. Then people will say, well, this is all thanks to Trump. And what will they think? They will go to the Trump coin, they will buy it, and they will buy for the expansion. So if you're buying now, the initial hype is over. You're probably not going to 2, 3x, 4x the money quickly, but over time, can this one have a decent potential of rallying with Bitcoin with the rest of the market? Yes, but don't get your hopes up, guys. You're not going to throw $100 into this and make $1 million. Those times are largely behind you, as a matter of fact, unfortunately, but it could be something interesting if ever you're looking to play the narrative. Moving into Bitcoin as a whole, well, Bitcoin looking very good right now. Bitcoin up about 106K. Daily higher lows are set right now. Higher lows are set at about 99.6. Gonna be looking for the daily trend expansion overall. Looking very good. This is the breakout, retest, and run trade. I did take a very nice trade on Bitcoin this morning. A few different ways. Number one, I had a 10x leverage trade that I did on, well, for all intents and purposes, pretty much like Binance or MEXC or whatnot. Any centralized or decentralized exchange that offers leverage. Entered the trade, hit the trade with a decent little portion, made about 43% on that trade. Very nice in terms of a 10x leverage. And I wrote some short puts on BITX, which I'll show you at the end of the video as well. All in all, Bitcoin is looking quite fantastic, if I do say so myself. The daily is looking good. Just pay special attention to 99.5. Any move, high or low for possible rally. Looking very good for the breakout, retest, and run. And on the weekly as well, guys, looking very, very, very strong. This is a weekly breakout, retest of a established support range, held it for 4 or 5 weeks, retest of the 12 EMA, all right, and now possibly looking for the expansion. Look at this monthly. The monthly is looking very good, possibly for some continuation, guys. We will see. The job's not done yet. We will see if they can really start cracking above these levels. All in all, not looking too bad. The rest of crypto, though, somewhat subdued, right? Ethereum right now, a little bit subdued, trying to go for the daily uptrend. But right now, all the focus is really on Bitcoin. As a matter of fact, one of the things, let's see if I can find it in the Discord. I posted this during the time that the Trump trade was happening. The Trump trade actually pulled liquidity away from the entire market. Let me see if I can actually find you the screenshot here of when I was posting this and why I said it would possibly move higher. This was arguably the smoking gun as a whole. Let me see if I can find it real quick. Let me just pause the video so I don't burn you guys' time too much. Okay, so here's a screenshot in my Discord of the time. I don't know if you guys can see that. I don't think I can blow it up that much. Apologies for that if it's a bit small. Everything was down except for Jupiter, the platform where you could trade Trump, and Solana, of course, where because the Trump coin is on the Solana network. Everything else was down. It sapped liquidity from the entire market. I'd never seen that before in my entire life for one single coin. Sometimes coins pull liquidity from various other networks, but not the entire market overall. So there's some lasting impacts on the rest of the market. You can see AVAX had a bit of a dump. All the other major ones had a little bit of a dump, which leads the fact that Bitcoin has held up better than the rest. And take a look at the Bitcoin dominance chart. You will see that Bitcoin dominance holding. To get the altcoin rally, you need the breakdown, guys. So Ethereum, only Solana is breaking new all-time highs right now with that giga candle from the sheer amount of volume that poured into Solana, people buying Solana to then exchange Solana for the Trump meme coin. That is the resulting big candle that we had, looking very good, looking for some daily trend continuation. Other than Solana, though, the rest of the altcoin rally is not yet here. It is, in my opinion, still time to position slowly into the altcoins for the potential Bitcoin rally beyond the all-time highs, and that eventually will cascade into the rest of the altcoins, but very slowly. We know crypto is a big game of rotation, and it all starts with the big daddy trade of them all, which is the Bitcoin expansion. Then you get a little bit of hesitation, and that's usually when the alts start popping off. So keep that in mind when looking for the altcoin rotation. The dominance chart should be your go-to chart. Now, moving on further for Apple. So Apple continuing, let's get into our big tech names, shall we? 3.19% to the downside. I'll try to cover these a little bit quickly, and then we'll go through the portfolio. So Apple down about 3.19%. This, in my opinion, guys, has to be some sort of climax, right? So whenever I'm looking for a possible bottoming out, I'm looking for confluence, and confluence on Apple, there definitely is. Number one, daily oversold conditions. Number two, tapping into the 200-day EMA. Usually when Apple taps into the 200-day EMA, it can signal, especially when measured with confluence, right, in terms of daily oversold, volume climax as well. When it taps into the 200 EMA with confluence, right, oversold, volume climax, support area, usually, and a gap down open, usually that could mark some form of a temporary bottom. So I'm not calling this is the absolute bottom of this move on Apple, but can we be due for a bounce right here? Yes, but keep an eye on the hourly time frame. Need to see an hourly trend change into tomorrow and start recovering a little bit of the gap today. The overall context, though, remains a daily down trend into the 200-day EMA and into support 225 down to about 215, which is this range of price action back there. So that being said, we'll take an eye on the size of the bounce if it does happen, and if the bulls can recover a nice enough portion of the bounce, they could set themselves up nicely for a little bit of a daily uptrend recapture pattern leading into their earnings, which is going to be next Thursday. So not that many days of trade left for Apple. Would like to see them bounce off the lows, create enough space at least to be able to withstand any possible blows that earnings could bring their way if ever their numbers are somewhat underwhelming. But this possibly volume climax, oversold conditions as well, could mark a temporary bottom on Apple. I'll remind you why Apple's been down so much is because they have flat year-over-year revenue growth, and while they're trading at a 3 peg. Very high valuation for a company that, for all intents and purposes, has been bolstering their EPS with buybacks. Not because they bring more money to the bottom line, really only for buybacks. You can see their net margin has not moved in the last 4 years, although they've been expanding revenues, and also in terms of their EPS largely flat over the last couple of years, and in terms of revenue, largely flat for the last 4 years of trading as well. So that is the concerns with Apple right now. And when you put that as well with some analyst downgrades over the last few days, you end up with a large sell-off, especially when you consider some news out of China that Apple's shipments and Apple's lead status in the country is kind of losing ground. So that is my take on Apple. Decent little opportunity. I am in this one 222.5, I have some short puts. We'll see if we get assigned or not, but I am looking to buy a little bit of the dip on Apple, as this is an area that I've been very patiently waiting for ever since the early portion of the month of November. So I am looking to play this for a little bit of a bounce trade and then get out and then wait for earnings to see what we can have after that. Moving on to AMD right now. So AMD bouncing a little bit on its own today, 0.68% to the upside. Not too bad, guys, but I'll remind you the context, right? Sweeping move to the downside. Now we're looking for the lower high. How high is the lower high going to be? Now, resistance above 123 up to 134. We know that resistance has been an area of congestion a few times for the bulls so far and could be a little bit problematic as we move into it. Now, in terms of the size of the move to the upside, let me just turn off the volume or else there's just too many things on the chart and I don't want you guys to get, there you go. All right, perfect. So moving on in, that's not the fib that I wanted. This is the fib that I wanted. Perfect. So in terms of the size of the bounce right now, 50% bounce. So it gives the bulls a 50% chance of going into a new daily uptrend pattern, or it gives the bears a 50% chance of blasting us back down to the new lows. That being said, if AMD bulls can keep up a few more days of rally, get a 618 bounce or a 782 bounce, it will favor the bulls for a little bit of trend recapture potential. But all in all, AMD, I'll remind you, the thesis is always the same. Yes, it is a monthly downtrend. Yes, it is also a weekly downtrend that we know. It is clear as day. And as of most recently too, it is still, arguably until the bulls turn it around, still a setup for a daily downtrend continuation. All those things we know. People call it advanced money destroyer and things like that, right? However, this is a stock that you either like or you do not like as a whole. For those of you that do like it, the arguments are fairly compelling. Growing revenue and EPS very well per year. Growing the PEG ratio is extremely cheap right now. And the expansion of the thesis, I bring this up every video, the expansion of the thesis is the ramp of the data center business to compete with NVIDIA, EPS expansion in the next 3 years, and revenue expansion in the next 3 years as well. We're not saying they're going to overtake NVIDIA. That is not possible. But can they come in and take 5-10% market share? Quite possibly. As a matter of fact, that guidance, this expansion, is exactly for only a 5 to 10% market share. So we're not asking too much from the company. We're just looking for them to participate and increase their revenues, free cash flow, and margins in the process. And right now, I do believe the risk to reward is more favorable. The risk, in my opinion, extends maybe to the low 100s. So what do you have? $20 worth of risk? But fair value for AMD, considering their future growth, in my opinion, sits around 150, 160. So you're looking at about $30, $40 of upside, you know, in the next maybe 60 to 90 days, and only $20 worth of downside, which is why I say the risk to reward is flipped in favor of it being a favorable trade. Moving on to Amazon right now. So Amazon not looking too bad at all today. As a matter of fact, almost towards the new all-time highs, guys. 2.11%. Amazon looking very well. We know this was a daily downtrend. Engulfing move to the upside right now. Same thing as the SPY and QQQ. Eventually, they'll have to reset the daily higher lows to get the daily uptrend back. Look at the MACD crossing now after over a month worth of consolidation. So Amazon might just be looking to expand leading into the end of January. They have their earnings next Thursday as well. So we'll definitely see what's happening there. But I think Q4 for Amazon, guys, is usually always the best quarter of the year for them. For the retail business, yes, but we have to take a look at their cloud business, the AWS, of course, the advertising business that they've been ramping as well. And one thing that Amazon has not been doing in the last 10 years that they've been in business, which is focusing on the shareholder, focusing on EPS expansion, focusing on net margin expansion. I know. Amazon and net margins, usually that's a paradoxical argument, right? But look, they've been expanding net margins, expanding free cash flow, expanding profits, guys. So Amazon is going to be a highly profitable company. Look at the EPS expansion curve. Now it's starting to take off, but the revenue curve has always been taking off, but they're focusing more on the bottom line, which is why I love this company into 2024. The valuation at 220 is also not that bad. It was a 1.65, now at about 5% higher. You can argue maybe it's what? Around 1.75, still not all that bad. And with them focusing on profitability, this EPS, right, is going to get even better and better with this EPS growth rate, only at a 1.75 peg right now, not that bad of a deal. So looking for the trend recapture. And the weekly bulls, I mean, this was a weekly bull flag. I've been calling it for the last few weeks, right? Nice expansion, bull flag into possible engulfing and continuation. Looking quite good for that expansion right now. In terms of our next one, is going to be Google. So Google up about 1.05%. They hit a new all-time high today. 203.80 is the new all-time high before giving back a little bit of those gains. Google's getting a little bit nervous here at $200. I don't blame them. I would be nervous too if I had a $1.5 trillion company breaking above a psychological level, or 2.5 trillion. My bad. Sorry, Google. I shaved off a trillion off you guys. Daily uptrend, guys. Daily uptrend is now back in motion, looking for a higher low. If the declines continue, anything above 188, looking for a higher low into further trend continuation. Suffice to say that my favorite area on Google is down in the low 180s. But if Google held up the test of time since Powell, through all the fear, through all the uncertainty, if we get further broadening out of the market, do you guys really think that Google's going to come down here for no reason? Probably not. Only earnings could do that to Google. Before earnings, I would be willing to play it. If we drop down here, I'll be looking to write some short puts, 190, 180. Google still at $200 is relatively cheap. The PEG ratio at 1.96 is the cheapest of all big tech at a 1.43. Tremendous growth for the company, so I will be looking to maybe buy the dip to go for some expansion and even loading up on some leap calls. If I can find the low 190s again, I'm probably going to load up on my leap call position that I cut just earlier. I had the 135s for September. The delta on those was a bit too high for me now. I'll be looking to reset here for June 2026, probably going for like the 180, 175 calls, 70, 80 delta, something like that. Go for the overall expansion, but I know it can be bumpy, so that's why I'm going to put a lot of time on these contracts. Moving on to Meta right now. So Meta also not looking too bad. They have their earnings, I'll remind you, next Wednesday as well. Meta just kind of holding some form of a very, very tight and, well, a tight yet wide range at the same time, right? What they're trying to do right now is they're trying to go for the daily uptrend breakout. That'll only happen if they break the all-time highs 631. Below us, we have support 598 down to about 582. So if we retest this area, guys, before earnings, not going to look the best, especially if we break it. But if we move on to new all-time highs before earnings, it'll give them a lot of cushion that if earnings are not well received by Wall Street, which I would be surprised, mind you, but if they're not well received, they have a lot of cushion and can use this area as a fallback of support. All in all, the chart is looking fantastic, guys. This as well is somewhat of a weekly bull flag. Just looking like a bull flag, tightening up of a range at the top end of a move, possibly just looking for some expansion, and Meta deserves it because the fundamentals of this business are absolutely fantastic when we went over them after last earnings. Moving into Microsoft right now, down about 0.12%. Not the best day, not the worst day for Microsoft, but I keep saying it, guys. I think Microsoft is just a question of time, right? You've seen breakout after breakout for the all-time highs. Apple with the massive breakout through the all-time highs. Amazon with the massive breakout. Google with the massive breakout. Meta with the massive breakout. Who is the only one? Tesla, NVIDIA, arguably massive breakout, been a massive breakout all year pretty much. Tesla with the massive breakout, all-time highs. The only one in all Mag 7, arguably the one with the best fundamentals out of them all. Not the best valuation, but the most solid business model, the most solid balance sheet in the entire game, the company that never misses. Look how the last time they missed a quarter was 2022 in the bear market. Other than that, the company that arguably never misses an earnings quarter at all, always improves EPS, always improves free cash flow, and has tremendous net margins. The only company that hasn't done it is Microsoft. So Microsoft has been accumulating for 1 year worth of time while improving its fundamentals, while improving net margins from low 30s to high 30s, while improving quarterly EPS, quarter over quarter, beat, and the annual EPS ramp looks like this. Revenue, quarter over quarter, beat, all across the board, and now expanding into the next 4 years. What do you think is going to happen to a company that's been consolidating for a year's worth of time, accumulating, right, with improving fundamentals? Well, the bias has to be a bullish breakout. When the breakout happens, you guys know Microsoft, when it breaks out hard, it breaks out fast, and it never really looks back, right? Probably one of those is going to happen. The timing is, of course, up for guesses, but earnings, in my opinion, can potentially be the catalyst if they show Wall Street what it wants, which is a very solid cloud Azure business overall, and just an expansion of the PC refresh cycle as well, due to Windows 11 coming out obviously shortly, or the new version of Windows, of course, right? So moving on further, daily looking like a nice daily engulfing move. The context was the daily downtrend. Now we get the 100% engulfing move, looking for the daily higher lows for the expansion. If Microsoft pulls back a little bit more, either before earnings or after earnings, I'm a very big fan of writing short puts, 415 down to about 410, 30, 45 days if you have a larger account, 30, 45, 60 days in this pocket. Tremendous pocket of support, guys. Been support all year, 406 down to 390. If you write 60-day puts at 415, you'll arguably get close to $8 to $10 of credit, which will bring your break even down into this location. Fantastic trade. I've done this many, many times with my bigger account over the course of the last year, roughly, and I've been making a lot of money on Microsoft. Hopefully you guys are as well. Looking for the trend recapture, eventual breakout too, and also looking just to possibly embark on the weekly breakout. Once again, their earnings are next Monday. So coming up very, very, very soon, next Wednesday, excuse me. Moving on to Netflix now. Well, Netflix we literally just covered, but if you want me to cover it again, they're all the way up here at $1,000. So similar context, right? What is the context for Netflix? I was always saying through this entire consolidation period, this is just looking for a weekly higher low. Anything above 750, looking for a weekly higher low for further trend continuation, and it looks like they used earnings for the trend continuation. There will be a gigantic gap here, guys. In the event we have to pull back and fill the gap, where are we going? Well, we're going right back to where we left off from 920 roughly to about 930 could be the gap fill territory. We'll just be looking for a very healthy weekly higher low for possible further trend continuation. That is the setup I'd be most keen on looking for Netflix, because I'm not looking to buy the all-time high breakout, blue sky breakout right here for continuation. That would just be greedy. I'm going to wait patiently for my setup. And if it doesn't come, I'll just move on to the next trade, but looking fantastic on Netflix. NVIDIA up about 2.27% as well. Not looking too bad there either. NVIDIA challenging resistance, 147 to 141 is first, second, third, fourth, maybe fourth and fifth. Oh, let's just say fifth or sixth time is a charm, right? So overhead resistance, we'll see if they can get it done. Nice bounce. Eventually, the bulls will run out of gas here. You want to see them set up the higher low into the higher high, all-time breakout pattern, similar to the one they did right here, and then they kind of failed. We'll see if they can do it again. All in all, though, trapped between resistance and support down here, 130, 125. I'll say it once, I'll say it 1,000 times. If we curl back down, I'll be looking to write some short puts, 130 down to 125, and the best area would be down here, but I'm not too sure if we're going to get it. I already have my leap call positions on NVIDIA, but in the event we drop a little bit lower, I will be looking to build those leap call positions again. Decent opportunity, guys. I'd be targeting maybe, the expansion towards the 170. I'm not saying NVIDIA is going to go 225, 250. It'd be nice if it happens, right? But my leaps are very conservative. I'll just be looking for expansion into maybe the 165, 170, and I'll be happy with that move. Overall, that would be a move of roughly about, 20, 25%. So for some leaps that have inherent 3 times leverage, that'll be roughly anywhere between a 60 to 75% move on a leap contract in a short amount of time. Good enough for me. Moving on to Tesla right now. So Tesla as well, establishing some very nice higher lows today, right? They tried to retest support down there at 409, rejected from it, and now pushed a little bit higher today. I did fire off a Tesla trade today, as a matter of fact. So looking for the higher lows for possible further trend continuation, because it is indeed a daily uptrend. Crossing of the MACD that's been roughly weak ever since the Jerome Powell incident. And now we are looking to maybe get the daily uptrend back and push higher and higher into levels. Keep in mind, though, earnings next Wednesday. So in my opinion, going to be very tough for Tesla to push up much before earnings, but you would like to see them create as much space as possible between them and these lows. That way, if earnings are not well received, at least they have a very large cushion to absorb that blow or are closer to the all-time highs for a possible just moon breakout like we just saw on Netflix, right? So all in all, Tesla not looking bad at all. I'm still looking on any dips to play short puts below this range right there, preferably in the 360 to roughly 350 range. But all in all, weekly uptrend is clear as day for the bulls, just looking for some expansion, but maybe a little bit muted before earnings. We'll see what we get on earnings. Going to be tough to play it much with some size before earnings without being extremely speculative, right? In either direction. Moving on to Palantir right now, up about 1.81. Palantir just slowly clawing back the losses of the last few weeks. And so far, so good. We know the context of the daily downtrend, but look at the size of the bounce. Size of the bounce actually right now is not too bad. It's a 618 bounce. And we are also back above the recent area that was challenging, right? Prior resistance was prior support for the markets was new resistance. Now we're coming up a bit above that. If we can make maybe 1 or 2 more days of upside, it'll give us some space. This box becomes support, and then you're looking for the engulfing, and then the daily higher lows, and then the daily uptrend reset as we have lost it so far. So far, so good for Palantir, but just keep in mind, until they reset into the daily uptrend, we cannot say this weekly consolidation move is finished, because there's always an option that they just unravel and retest the lows, right? If the market continues broadening out, that is a lower and lower probability, but it is still a probability, right? Even if the probability is only 10, 15, 20%, it still exists. So we have to manage the risk accordingly. If Palantir does drop a little bit right here, could be some interesting opportunities if you're very aggressive with some short puts. 63 down to $60 could be a decent little entry level if you're just looking to play the momentum on Palantir. All in all, not looking too bad, but just keep in mind what we were always looking for on Palantir. We were always just looking for a weekly higher low for further trend continuation, right? So are we going to get it now, or maybe do we consolidate a little bit more before getting it? Who knows? But as of right now, decent consolidation, cooled off the higher time frames. The MACD looking iffy right now, but until it crosses in a big way, which would only be, in my opinion, if we get the weekly downtrend, it can just, compress and then continue expanding, right? It's done that a few times. That's why the MACD is never the end all be all indicator, right? It did the same thing right back there. You see it on the MACD right down here, right? So we were in this move, nice move up that expanded. It looked like it was crossing and then it just went for another leg. So it can always happen. The MACD is just an additional confirmation signal for momentum. It's not the end all be all indicator, right? And now lastly, SOFI up 8.48%, guys. The bank earnings have been very kind to SOFI as a whole. We were taking note of this crossing MACD momentum. When you have an engulfing move like this, guys, and crossing of MACD, which puts an end to a daily uptrend, daily downtrend, excuse me, suffice to say that you can actually believe the MACD is crossing for real, right? Tons of space created. At this point, anything off the lows, 1361, looking for a higher low for further trend continuation. This is the trade I'm looking for, guys. If we get a retrace over the next few days into the higher lows for earnings, this would be the lottery play for earnings calls, because we already know that the banks have been doing well. I would not be surprised if SOFI additionally has some very good earnings, right? But I will be looking for a very shallow pullback into support 16 down to about 14, the previous area we've established, for that opportunity to maintain a little bit of a long side exposure into SOFI for the possible expansion into the $18 to $20 range. Congratulations to all the bulls. Chart is looking great right now. And that is my take on the market, on big tech as a whole. Now let's jump into a few of the trades that I made over the course of the day today. So let me just gather them real quick. So the portfolio not looking too bad today. We were up cool. This is slightly under. We're actually up closer to $600. It moves a little bit with the after hours because it can't really Interactive Brokers sometimes doesn't track the spreads too well in terms of like the bull debit spreads and stuff like that. All in all, today we're up roughly $600, which was roughly 0.75 0.8% on the portfolio. This is not the, excuse me, got the wrong chart up here, but this, I guess you can see my year to date from last February as well. Very stable as well. And in terms of the weekly, or sorry, the year to date performance for 2025, we are up now about 9.39% for the month of January, and for 2025 as a whole. All in all, very decent, but we haven't taken on too much risk at all. Haven't really changed anything. As a matter of fact, in the last 2 weeks, I de-risked a lot of the portfolio, took a lot of the gains off the table, and we just stayed with some of the plays that we liked still, and we were just running the wheel strategy. So nothing fancy to generate the sheer amount of outperformance that we've had, just de-risking early and then buying the dip with the money that we de-risked with. And that has been very good for us over the course of the last 2 weeks of trade. So before we get into the positions that we still have, let me go over a few of the trades that we closed. So one of the trades that we closed today was the AMD trade. You might remember I had an AMD wheel trade, 115 short puts that we opened roughly last Thursday. Actually, it was last Wednesday. We got about $1.90 for them. They were 2-week contracts for about $1.90. I closed them today at a profit of about $1.30 each, which is roughly, for all intents and purposes, over 1%. Very, very solid performance here, guys, right? 70% win. No sense holding the contracts through the next Friday session, because next Friday, the next week as well, they have earnings. So when I can see that I can pull a lot of premium forward in a short amount of time, I will take that off the table. No sense in me keeping 60 cents on the table for the next week and a half of trade. I'd rather take that money and find another opportunity, possibly something that's not directly exposed to earnings, because the price can fluctuate before then. So that was one of the closing trades that we made today. In terms of the new positions, we'll go through these very quickly because we did a full portfolio recap last Friday. So the Apple wheel is still in place at 225 puts. As I said, I was buying the dip on Apple, slightly underwater now, but I do not mind being assigned at this level. We'll see what happens until the Friday close. New positions today, we opened some BITX short puts at the low of the day. One contract here, and you can see it's already moving nicely. Our average cost, sorry, the columns are all over the place. Let me just edit this real quick, my bad. I don't want to keep you guys here forever, but just so I can kind of streamline this down. So the average price we got on BITX was 29.30 cents. They're roughly half off, almost half off right now, so looking good. Elf Beauty 115 short puts are still in play. Fantastic opportunity on Elf Beauty for those of you that were looking at it. It was in the top 5 options play, and people in my Discord were getting, you know, the 112, 111, 110 short puts for the Friday session today. Fantastic level for Elf Beauty. They've been down a lot in the last 2 days. No specific news, but in essence, guys, maybe some concerns around the tariffs towards China because Elf Beauty sources a lot of their products from China, even though after the short seller report, they said that they had many capacities to source their products from other locations such as Vietnam and Thailand. Nobody listened. This is just a short-term headline risk. So I will be buying the dip down there. So you guys can see I'm in this one as well, 115 short puts. Another trade that we made today, Johnson & Johnson play for earnings. You guys know my 2 standard deviation plays on earnings. The 143 puts on Johnson & Johnson, we got roughly 37 cents for them. We'll see how they play out tomorrow. The company has earnings. We also made a play on Netflix. 2-part play, a combo play on Netflix. Number 1 was a bull call debit spread. 227 was the entry, 885, 890s. Those will be up there for April. They'll be up a lot tomorrow, but what might be tested is the Iron Condor. So the Iron Condor, if you guys don't know what an Iron Condor is, very, very easy, guys. It's just a combo of 2 credit spreads, essentially. It's a call credit spread above the market and a put credit spread below the market. You want the stock to stay between these 2 levels. You can only lose on one of these trades. If the upside gets tested, this one is 100% profitable, but this one might end up at a little bit of a loss. And conversely, if it goes down and tests this one will be 100% profit, and this one you might end up at a loss. The best case is if it stays between the 2 and you can pocket premium on both sides, right? That's exactly what we did for Netflix overall. So Netflix, the Iron Condor, 717, 722. That was the put credit spread to the downside, all the way 2 standard deviations away. Expected move on Netflix was 7.5%. I went 16, 18 almost away in both directions, and arguably it almost still wasn't enough, right? So the put side will be worthless, but the call side might be challenged tomorrow. So in that case, this Condor tomorrow will probably be at about $100, $150, maybe $200 loss, but the debit spread will largely make up for that, right? And that is why I put the debit spread on as well, because I believe the upside risk was more than the downside risk. I thought Netflix would have a good quarter. I wasn't sure they were going to make a 2 standard deviation move to the upside, but I was pretty confident, especially after the Jake Paul and Mike Tyson fight, the Squid Games, a lot of their other very nice releases in terms of their big TV shows and whatnot. It was just a very good quarter for them overall. Ad tier subscription, I knew was going to add to the bottom line, so I knew it was going to be a good quarter. Q4 is usually a good quarter for Netflix. I wasn't sure how much they would beat though, or how the market would respond. So we went very wide, and still going that wide wasn't enough. So that's why I complemented the trade with a long, because I thought the long side would have the most chance of being challenged. So I wanted some long exposure to counteract that. So tomorrow, this position may just be a wash, maybe no profit, no loss overall. But overall, I'm happy that I did make an attempt at playing it. Fantastic day from Netflix. So that is the moral of the story on that one. Other than that, guys, I mean, we wrote some TSLLs. Also on my top 5 options list in the bonus plays, TSLL 22.7 on when Tesla was down 3-4% this morning. You can see we got 15 cents. They're almost worthless, guys. One small contract, because I was looking for Netflix, Tesla to move further down, maybe today, tomorrow, and Friday into their earnings, perhaps, into the support range. And I was going to add to this position. A bit disappointed that I didn't get to add to it. I wanted to go maybe 4 or 5 contracts maximum, but only got 1 off before it kind of bounced. So, I mean, I'll take the money, but I was looking to get a bit more size on those. And UAL as well as an earnings trade. 1 contract, as you can see, 20 cents. They had their earnings after the close. We went with the 2 standard deviation move, 2 times the expected move in terms of being far away. And UAL coming out with some decent earnings in the after hours. You can see they're currently roughly planted here in the after hours. A couple of percentage points higher. So those will be completely worthless tomorrow. So 2 very good earnings trades overall. Johnson & Johnson, I'm confident in. UAL, we won already. Tesla, good profits. Bitcoin, good profits. The Netflix one will probably be a wash. We'll see how it ends up tomorrow, but I'll keep you guys posted, right? So that's everything for the closed trades. I have a ton of buying power, guys. So I'll be looking to buy the dips on my favorite companies and just continue to slowly ramp up the capital and continuously beat the S&P 500. You guys know it best on this channel. We don't go for the home run trades. We do hit a lot of home run trades, but we don't proactively go for the quantum computing plays with size or anything like that. Solid companies, leap call contracts at good levels, and the rest of our capital is used for the wheel trades or some call debit spread trades here and there. Just looking for consistent, base hits and outperformance amongst the index, which is why when we go back in my 2 years of performance roughly, I beat the S&P by roughly a factor of almost 3 to 1 in the last 2 years of trade publicly on the channel when I created this portfolio largely for you guys, because you guys know I have a much bigger portfolio than this. But I feel that if I show you the big portfolio and the account strategies that I use in there, it's literally just a bunch of contracts on SPY, QQQ, Microsoft, and other share prices that are very high that most people don't have access to, right? What good does it serve me to show you guys I just wrote four put options on Microsoft at 415 when you guys don't have 40K to play one contract? You know what I mean? So this account is where I show you guys all the small account strategies and how you can rotate the plays in and out to be capital efficient and grow the capital quickly and somewhat more aggressively than you would if you had a larger account, right? So that being said, that is it for today's video. Sorry it was a bit longer, that we had to do a lot of recap of what happened over the last few days, because it's been wild to say the least. So thanks very much for watching, guys. If you enjoyed it, consider dropping a like, would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. I'm so close to 5,000 subscribers. I can feel it, guys. So help me get over that milestone. I know it's not big in terms of a lot of other channels out there, but it's big for me. So if you can hit that subscribe button, would really appreciate it. And lastly, guys, if you have any questions on the strategy, on a stock, or anything you want, leave it down below in the comments and I'll be glad to help you out. And in the event that you guys are interested in joining the private Discord in terms of wanting access to all the trades, the wheel trades, you know, the earnings trades, the directional trades, the call debit spreads, the leap call contracts, the short-term calls, the share swing trades, the long-term portfolio trades as well, the link to the Discord is down below in the description. I also do private morning live streams every Monday to Friday before the at the open for about 2 hours each morning. You guys can ask me all your questions and ask me to look at specific stocks, and I live trade as well, of course. And of course, you also get access to all of my watch lists and all of the annotations on all of my charts, the Netflix earnings, the PEG ratios, everything that I spend so much time doing for you guys. You get all of that in my Discord, all the watch lists as well. This one, my options watch list, all the different watch lists that I don't sometimes show, and many, many more features too, such as the private videos where I share advanced option strategies and just more strategy and detailed videos than I do show on YouTube, psychology videos as well, how to grow a small account, how to trade, how to position depending on the size of your account, all things that I haven't dropped on YouTube to say the least. So that is pretty much it for the Discord. If you're interested, the link is down below. Hopefully I see you in there soon, and if not, I guess I'll see you back on the channel. So take care, guys. That's it for me. I'll see you tomorrow after the close, and enjoy the day of trading tomorrow. Should be a good one. Take care and peace.